A lot has been made about the rise of gold over the past few years. It is, after all, up about 66% in just 2 years. But the really hot commodity has actually been silver. Its rise over the past decade dwarfs that of gold. In fact, it is off the chart. You're looking at the 10-year returns of silver, gold, and the S&P 500. Over that period, silver's up 937%. Gold, which seems to get all the attention, is about up half as much, 469%. They don't call these precious metals for nothing either. The broad-based S&P 500 equities index up just 7% over the same time frame. Nick Barisheff is President and CEO of Bullion Management Group. Great to have you with us.
Great to be here again.
Now, this chart probably doesn't surprise you. In fact, I think you're on the record as saying that silver should be even stronger than it is. Why is that?
Well, if you look at the various ratios, first of all, gold to silver ratio in the ground is 16 to 1. So that's one indicator. Secondly, in 1980 at the peak, we had about a 17 to 1 ratio. And if you look at the original U.S. Coinage Act, it defined a dollar as 1 ounce of gold and 16 ounces of silver. So this 16, ratio has been in place.
Right.
Right now the ratio is 33, and that's come down a lot because it was over 60, recently. So you've got that. That's a factor. And when you consider that gold is almost twice the 1980 high, and silver hasn't quite reached it yet, so that indicator would tell you that silver should be 100 right now.
Now, one of the things about gold, of course, is that it's sort of a funny metal. It trades on a lot of emotion. It doesn't have any industrial purpose, particularly jewelry demand, is it? Is it true for silver, or there are industrial uses for silver?
Well,
how much of this is emotion?
There's quite a few industrial uses for gold, and as you get more and more high-tech applications, gold, silver, platinum, they all have their own special uses, and more uses are being invented. But silver has the most industrial applications. There's new inventions, there's more patents coming out that need silver. So you have that as a factor. But the other issue is that in most of those applications, the price is relatively inelastic. So if your cell phone has like 2 cents worth of silver, it's not going to make any difference whether it's $40 or $400. So it's going to have little effect on the price. While at the same time, if you don't have silver, you're not going to make any cell phones or most other electronics.
Right.
So it's a must-have issue. Secondly, from a mine production point of view, 70% of the mine production is byproduct. So if you're a copper, zinc, lead miner, and you have some minuscule amount of silver in the process, you're not going to be able to dig up more copper for the 2% silver offtake. Whereas in gold mines, they're primarily gold mines.
Yeah.
Silver, there's relatively few pure silver mines. So you can't adjust, production that easily either. And although now, some of the mines that were uneconomic at $5 silver, of course, are becoming economic, but it'll still take a while for them to come on stream.
Who buys silver? And what's the best way to buy it? I guess, do you like the ETF, or should you go with an actual producer?
I think that there's, first of all, the bullion versus the producers.
Yeah.
And unlike the 70s, we have a different phenomenon. The 70s bull market was largely a North American phenomenon. China, India, Russia, Brazil weren't part of that. Now we have a different story.
Yeah.
So as investors in different parts of the world get nervous about their currencies, get nervous about coming inflation, they don't run out and buy shares of Barrick. Okay, they run out and buy physical bullion or physical silver and so on. So we have a different phenomenon, and that's one of the reasons why the mining stocks, which often outperform, haven't been outperforming the bullion since about the spring of 2006.
Does silver move with inflation the way that gold does? Do they move because they have this ratio?
Both. Gold, silver, platinum are the most positively correlated to inflation and the most negatively correlated to financial assets. So that's why every portfolio should have some allocation for ease of arithmetic, call it 10%.
Yeah. So people talk about 5% allocation to gold. You would say you need silver as well?
Precious, I would say precious metals. And in our case, our first fund, the BMG Bullion Fund, we buy equal amounts of gold, silver, and platinum, and we don't hedge, lease, rebalance, leverage, any of those things. It's a pure investment with nobody messing with the bullion kind of thing.
All right, Nick, great to have you here for this.
Okay, my pleasure.
Nick Barisheff, President and CEO, Bullion Management Group. Stay with us.